bring in Matt Smith. Matt is the Director of Commodity Research at ClipperData. Matt, the central question, and it's being played out, New York Times has a story today. This time, cheaper oil does little for the U.S. economy. Tom Close, the last hour, said he thinks that it's shifted from being a benefit to consumers to a negative with the kind of job cuts, production cuts, and imminent bankruptcies. What say you?
Well, it has had a very mottled effect across the world. You can make the case that the U.S. consumer has seen the best benefit because we have seen gasoline prices drop so much. We're well below $2 a gallon here in the U.S., and so that is feeding through to greater consumer spending for the U.S. consumer. But that said, because of the contagion that we're seeing in terms of the oil and gas industry spreading to the rest of the economy, it isn't having as positive an impact as we initially thought that it would do.
Kevin, this is, you essentially called this 2 hours ago. This is the very thing you were talking about dividend cuts, and Phil just broke the news about Chesapeake.
Yeah, I mean, there's a tsunami of dividend cuts / bankruptcies that are going to come through the system, because there's one thing that's abundantly clear with this oil market is that it's going to be lower for longer, right? It took us a long time to get to this level. It's going to take us a long time to get out of this level. No one's doing cuts. Everyone's still selling, whether it's for a loss. So I think that's foretelling for the market and this year. It's going to be a struggle. But my question to Matt is, you know, what is the actual consumer getting? Is it $500 a month? Is it $500 every 6 months? What is actually coming through? Because when are we going to start seeing that trickle in to the consumer spending that even more? I mean, we saw the savings rates at a 3-year high right now. I mean, it's at over 5%. Consumers are worried. What actual benefit are consumers getting from lower oil?
Well, I think, Kevin, you've already experienced the biggest benefit of it because of the gasoline drop over the last sort of 16, 14 months, really. And so that full benefit has probably been felt by now. And what that has filtered through to is predominantly more spending at restaurants. Actually, they've been filling up the pump and then going into that convenience store and spending that additional cash on candy bars, on coffee, etc. And so it's really been discretionary spending. But in terms of going forward, where is that money going into? Yes, it's been used in the last year to pay off credit cards. It's been going into savings. It's been going into restaurants, Target, other places like that. But really, it hasn't been as big a boon as we expected, and it probably won't be going forward. And we're seeing that really, I suppose, in the retail sales numbers coming through.
Right. Before you get in here, Joe, I just want to point out something Eric Bowling, we have exchanges all the time on email, and he points out that for it to really be a trickle-down, lasting economic impact, people have to trust these numbers. They have to trust that gas is not going to go back to $2.50, that it's going to cost $80 to fill up, as opposed to $30. They have to believe it. So if they believe, when they really begin to believe it, maybe it'll help.
It has to do with long-term planning and volatility in the markets and feeling psychologically strong enough to actually plan and factor all of that in and price that into your own pocketbook. So, Matt, I just want to know, looking at China, because every other company has been so affected by it, we know that oil consumption there is going to be continuing to basically move downward. What do you think the rest of 2016 looks like, and how does that affect U.S. companies?
Well, specifically relating to China, China has really been the stalwart of all demand growth for basically since the turn of the century, but now we're really starting to see that level off because essentially their diesel consumption has flattened because of industrial output slowing there. They're still relatively strong in terms of gasoline consumption, but we track crude oil vessels, and we see for the first time in living memory, to be honest, they're seeing year-over-year drops in terms of cargoes going into China, and so they're really starting to feel the pain there. And so when we've always expected them to be bringing sort of an extra additional 500,000 barrels a day of demand growth to the market, that just isn't likely for this year. And so what we've had in recent times here is oversupply concerns weighing on the market. Now the focus is shifting towards demand concerns and signs of that slowing.
Matt, we've talked a lot about what this means for Wall Street, what this means for financial markets, but I keep going back to, and some of my followers on Twitter are saying this morning as well, but I think this is a different impact for the average American consumer. There's still plenty of people in non-oil producing states in the U.S. who benefit from low oil prices. Do you think that there's a correlation between, or not a correlation between how oil is affecting the markets versus how it's affecting the average American consumer who needs cheaper gas to drive their kids to school in the morning?
Well, I think in terms of the economy, you're really seeing the states like North Dakota, Texas really getting hurt the most. In terms of the broader U.S., these low gasoline prices are providing as good a benefit as you think they could do, really. We're seeing basically full employment coming through here, 5% on the unemployment rate. There people are driving more miles than they have ever traveled, and so it is a benefit from that perspective. But really, with the impact on the global economy, that's filtering back through to the U.S. And really, even though the U.S. is doing better than most areas, we are in a situation where we seem to be seeing economic weakness.
Matt, good to see you. Thank you so much for being here. Matt Smith from ClipperData.
Thank you.